This is Eric Mothert, Mothert.com, with the weekend market analysis for June 8th and June 9th, 2019. Let's take a look at markets here in what has been a very powerful upside week. Here are where the markets are trading with about 2 to 3 minutes before the close of the session. Let's take a look here for the week. We can see that the Dow is up almost 5% or close to 1,200 points for the week. A huge up week. Take a look at the S&P 500, also up about 4.5%. Massive up week. Take a look at the Nasdaq, which is up about 4% for the week. So a very powerful beginning to the month of June 2019. If we take a look at the numbers I was using from the last weekend market analysis video, this level here on the Nasdaq, which is something we were watching coming into this week, the level to watch here was 7.5. There is the closing bell for June 7th, 2019. So this is the level here going back to the Nasdaq's close of January 2018, right here. Now, the reason why I was using this level for guidance is we see here failed breakout in February of 2018, and then we move above that level. Here, support subsequently, and then here we try to hold. Eventually, we broke below that level, turned into resistance after that. And we see that again, it changed where we have movement back above this area. Eventually, we have a 1 week down, but immediately recovered. And last week, you can see here, we closed below it, but we have this snapback reversal candle that takes out all this range from last week. Pretty much an outside bar kind of a week. So we can call this support on this line here. So net, as long as the Nasdaq is holding above 7505.77, then this market has repaired the recent damage. And could actually over time lead to higher prices as long as the market can clear short-term resistance levels. Of course, one challenge here in the immediate market trading as we go into the new week is the market going to have enough energy to hold above the 13-week moving average? We can see in periods where the Nasdaq and the market in general has been trending higher, market's been using the moving average, the 13-week moving average. We can even say the 10-week moving average has been used for support on the way up. If the market is going to go back to its winning ways, it needs to hold above the moving averages. So as far as the price goes, we can see that there was some type of a parallel line here or price channel, and the market did move above that range, which probably might be one of the reasons why we saw that pickup in momentum to the upside. And I think price is telling us that we've come out of this descending price channel and that the next movement should be clear to the upside. But I see a problem with this view because if you take a look at the RSI is suggesting that if there's going to be a resistance around current levels, it's going to come around current levels because of where the RSI stalled, coming off the highs here. Now, if you take that line and draw the Mothert uniformity line, for more of the Mothert uniformity, take a look. There should be a link in the description of the video. But we can see that the RSI is coming back to test this level as far as the Nasdaq is concerned. Take a look here. We have resistance, which gave us the highs there. And now we are in the vicinity of that red line. So chances are, if we are unable to move above that level, then this is where we start seeing the market stall as we go into the new week or as we begin the new week. Otherwise, if the market is going to move higher, it needs to hold above this red line. Keep in mind, this is just happening around the RSI level of 61.8. So which makes this a meaningful level to watch for some type of either a breakout above the red line or resistance. Resistance on the red line would suggest that the next swing trade direction in the short term is going to be lower. Now that concludes the free portion of this video. The rest of the video is for paid Muathe.com subscribers. And let me just leave you here with the closing numbers for the week. For subscribers, let's continue on.